We have been consistently growing, in the 6 to 7% quarter on quarter, and I see no reason why we cannot continue that trend. And I'm pretty bullish on, being able to end the financial year on a good note. So yes, I would be pretty confident on what you've said.
Who doesn't love to earn extra income from their investments? We all do, right? And do you know what happens when a company makes profit? Well, it has several options to do with that money. One option is to pay a portion of those profits to shareholders in the form of dividends. These dividends are a way for companies to return value to their shareholders, and they can be an important source of income for investors. Here are a few companies to watch out for that could announce the biggest dividends for 2023. From FMCG to aerospace to technology and AI, the list covers diverse industries. Investors looking for big dividends in 2023 can consider adding the following stocks to their watch list. Having said that, one must always stay informed, consider all factors, and do your due diligence before making any kind of investments. Tata Elxsi. It is one of the top AI stocks in India. Even though the stock price has fallen since mid-2022, the fundamentals of the business are still solid. As a result, stockholders can expect consistent profit growth from the business in the next years. The company's ability to pay dividends well into the future is likewise guaranteed. In financial year 2022, the corporation distributed a dividend of 42.5 rupees per share, or roughly half of its profit. The business will increase net profits by at least 25%, if not 30%. Thus, an increase of the same percentage should likewise be seen in the dividend per share. Dr. Reddy's Lab. Over the years, the pharma major has consistently performed well. In fact, in terms of profitability, financial year 2023 will be remembered as one of the finest in business history. The business has also consistently paid dividends. It distributed 30% of company profits as dividend in financial year 2022, a considerable increase from the previous year. Even if the payment ratio stays the same this year, shareholders can anticipate a significant increase in the per share dividend. Britannia Industries. This FMCG brand is having a great year. The company's sales increased by over 40% and its net profit by over 50% between financial year 2018 and financial year 2022. Investors can therefore anticipate the large dividend distribution to continue. It distributed 56.5 rupees dividends in financial year 2022 and had an 85% dividend payout ratio. The business's profits through the first 9 months of financial year 2023 had already surpassed those for the entire year in financial year 2022. Thus, it's all set to increase the dividend per share significantly this year. Hindustan Aeronautics. Over the years, the company has consistently increased its revenues and profits. This company has solid cash flows and no debt. Its sales and profits increased by 34% and 155% respectively between financial year 2018 and financial year 2022. The company has distributed a dividend equal to around 30% of its annual profits. It paid 50 rupees per share in financial year 2022. In financial year 2023, investors should also anticipate a sizable payment. Cera Sanitaryware. This company has been one of the market's largest growing stocks. The corporation paid a dividend of 35 rupees per share, or nearly 30% of its profits last year. The company is on track to produce outstanding earnings growth of more than 25% this year. As a result, investors can anticipate a sizable payoff. Hawkins Cookers. This is one of the top dividend stocks available on the Indian market. In fact, the average payout for the previous 5 years has been 75%, except for the COVID year when the corporation didn't pay a dividend. The corporation distributed 150 rupees per share dividend, or approximately 95% of its net profit last year. The company is anticipated to produce 10% earnings growth this year. If the company maintains its high payout, shareholders can expect an increase in the dividend per share of a similar magnitude. Persistent Systems. This stock has been one of the stars in the mid-cap IT market. The corporation paid out 31 rupees per share, or around 35% of its income in dividends last year. The business's net profit this year could increase by 25 to 30%. Shareholders might expect a comparable increase in the dividend per share if the distribution stays the same. Dividends in India have been picking up across various sectors after the pandemic, although the level of dividend payout can vary significantly between different industries. A high dividend yield may seem attractive, but it is important to consider whether that company can sustain that dividend over a longer period.